The S&P 500 grew a fantastic amount in 2024 at 23%, and the Magnificent Seven, well, they grew an amazing 66.9%. But a small little company like AppLovin stock grew over 700% in 2024. To give you a little bit of context, here's what $1,000 invested in those 3 different securities would have given you at the end of 2024, which makes it obvious why so many of us are looking for those hidden gems to just invest in at the right time. And that's why I'll cover the top 6 hidden gem stocks in today's video. And I'm not going to keep you guessing and skipping around the video to see which stock that I'm going to cover. I'll list them out on the screen right now like I usually do, because I know that seeing the list never really tells the story, and that's why I'm okay showing it right at the beginning of the video. In either case, I am not wasting your time. However, I do have a little bit of a request for you. Let me know in the comments if you want me to share more of my watch list type of stocks in my newsletter. I have roughly about 50 stocks that I consistently watch to see when there's a dip when I might want to buy into them, and that's what I would share. And if you're not familiar with the channel, I retired relatively young at the age of 46 from the corporate world, and I started my YouTube channel as a hobby, with the expectation to share with my friends and especially my older sister how I was investing. And my philosophy is a little bit boring since I tend to buy and hold for the long term. However, I do follow the lead from Mr. Buffett on occasion, and I do sell off some of my stock to take some profits when they're running ridiculously hot, like most of the market is right now. For me, investing is 90% on the offensive and 10% defensive, where I see taking profits on occasion as being defensive. And I do try to share all of my investment actions in my completely free newsletter for those of you that want to know what I'm thinking. But in no way is that financial advice. Let's jump right in with the first company of MongoDB, with the symbol MDB, where they are a software company that offers a general purpose, document-oriented database platform. Their flagship product, MongoDB Atlas, is a cloud-based database as a service solution that enables developers to build and scale applications across various industries. They've also expanded into MongoDB AI apps and working with partners like McKinsey and Meta. And in looking at their financials, their revenue has been on a solid growth, but their profit margin has consistently been negative. But the shining light is that their recent quarterly earnings, the profit margin was just under a negative 2%, which I realize that doesn't sound very good, but they are on the verge of a positive profit margin, which often rewards investors when that type of news breaks. And on the right there, debt to assets is slowly growing. And an item that's relatively important is this business is over 96% subscription based. And in the software business, that's where profit margins can become massive once you overcome your fixed costs. This company is currently seeing a big dip, well, along with most of the markets, making it just a little bit more attractive. This is one that I believe you'll want to definitely keep on your watch list, because I think that once it starts to see positive margins, it's going to see a major spike in its stock price. As for analysts, they see MongoDB as having over 36% upside over the next 12 months, and it is in the territory of buy given this recent dip. Because when we look at the 100-day simple moving average, it's at $277, and the gap has been closed, which happens to be another item that I look for. Now, this next stock has seen upside of over 180% year to date, and the entire business model is based on the critical metal of tungsten, which has the highest melting point of any element, and it's critical to industries like aerospace, electronics, construction, and defense. And sadly, 100% of the metal is imported, and 27% of that comes directly from our known adversary of China, which, for obvious reasons, the US needs to secure domestic sources to be self-sufficient. And seeing as how there are no producing mines available in the US today, it's time sensitive. That's where today's sponsor, American Tungsten with the ticker DEMRF, comes into play. They intend to be the first tungsten producer on US soil after many years of no mining whatsoever. There's very few minerals or metals that are deemed this critical from the Department of Energy, given the fact that the US produces none today. And we could become a shareholder of this first mover in the mining of tungsten. But please do your own homework on American Tungsten with my link down below. Our next company is Twilio, which is a cloud communications company that enables developers to embed voice, video, and messaging capabilities into applications through its platform. Their services are widely used across various industries to enhance customer engagement. This is another company where the revenue has been on a constant climb, but the margins have been negative. But yet again, this is on the verge of becoming positive, and this is something that I love to find in my potential investments. That and their debt to assets have dropped down on the right, and free cash flow has been steady in the lower left. And they've been beating forecasts 4 out of the 5 earnings calls. In looking at recent performance, they did have a big drop after dropping their future guidance. But they are early in their AI-driven products, like fraud protection. And analysts are seeing a lot of potential with over 30% upside. Let's move on to the next company of TaskUs, with the symbol TASK, where they are a digital outsourcing company that provides customer experience and back office support services to businesses worldwide. The company offers services such as content moderation, customer support, and AI operations, catering to clients like Facebook and DoorDash. They are an outsourcing arm for many of the large companies out there that rely on AI to build up their product offerings. This is one of the few gems that is making a consistent profit, and they have a relatively low P/E ratio of 25.9. And they are still considered a small cap company at under $2 billion market cap. And when we look at the financials, it's a pretty solid financial story when you look at strong revenue and improving positive margins. Debt to assets are high, but have been coming down in the upper right, and the cash flow is consistent on the lower left. And they have been beating quarterly forecasts the past 5 times in a row. On the downside, the company did have a major drop in price of about 13% when Meta announced their relaxed position of content control, which is an area that TaskUs was helping with. And with that behind them, there is room for upside, which you will see in the forecast from analysts having upwards of over 34% for the next 12 months. And moving right along onto our next company of ServiceNow, with the symbol NOW, where it is a US-based software company that offers a cloud computing platform to help businesses automate and manage digital workflows across various departments, including IT, human resources, finance, and customer service, where they recently acquired QIn, an AI-native conversation data analysis platform aimed at bolstering ServiceNow's AI agents' ability to process customer interactions a little bit more effectively. Now, when we look at the P/E ratio, it is high at a 144, and the market cap is fairly high at almost $200 billion. And in their 2025 guidance, they expect AI data solutions to grow 20% and their operating margin to be over 30.5% for the year, which, when you combine the two, it far exceeds the rule of 40 for software growth companies. And when we look at their financials, the revenue growth is quite high and the margins are seeing very good growth. The debt to assets is also seeing solid declines on the right, and the operating cash flow in the lower left is on fire. Match that up with a consistent beat to expectations, and this company is primed for solid stock performance. And when we look at the forecast from the analysts, they see it with over 27% upside for the year. And I realize that's a very expensive stock at over $900 a share, but most stock exchanges do allow you to invest in fractional shares. So a person never really has to buy in full share quantities unless you truly wanted to. Moving along to our next company of Datadog, with the symbol DDOG, which is a company that offers a cloud-native monitoring and security platform for IT applications. Essentially, their services help organizations to monitor servers, databases, tools, and services through a software as a service platform. And in all cases, they do leverage AI systems and models to monitor and provide solutions from their service. And as you can see, they did have a correction on February 12th after they announced a slowdown in revenue growth and no expected improvement in margin. But the correction is a little bit exaggerated, which does give it a little bit more value. When we look at their financials, their profits are positive, but they happen to be flat, and their revenue growth has been good in the past. Debt to assets has been reducing, and their operating cash flow in the lower left has seen steady growth. And they've consistently been beating forecasts, which happen to make this a little bit stronger than most in the form of fundamentals. And after last week's correction, well, the current price is lower than its lowest price target from analysts at $120. Giving them upside of over 34% for the analyst average consensus. This is a stock with a good foundation and is playing in a space that will continue growing with technology needs in data centers and enterprise security. However, Datadog is a larger cap company than most of today's companies, so it does have a lower ceiling of growth. In all cases from today's stocks, these are on my watch list, where many of them I bought on the dips. And many of you already know that you have access to my portfolio directly from my newsletter. I hope this video gave you a few new stocks to put on your watch list as hidden gems. Thanks again for watching.